People, welcome to Highest Forex. I'm African Rebel, and this is where we get traders from foundations to freedom. In this video, I'm going to talk about internal structures. All right. So for those of you who have been watching our videos, I'm sure you all remember this video when I talked about SMC multi-time frame analysis, right? How to do multi-time frame analysis as an SMC trader. All right. How you can trade from the higher time frame to the lower time frame. All right. So this video is going to be like a continuation of that video because you need to understand a multi-time frame analysis to be able to properly do an internal structure trading. You need to properly understand how to read the market top down before you can get what is called an internal structure, before you can apply this method I'm about to show to you guys. So guys, without wasting much of our time, let's get started. Okay people, so this is GBP USD and this is the 1 hour time frame. Just like I explained in the multi-time frame analysis video, the time frames are what? Three types. Okay, you need three types of time frame to be able to do a top-down analysis. You need a higher time frame and you need a medium time frame, which is what the internal structure time frame, and then you need an entry time frame. Okay, so the higher time frame is where you get to look at the direction from the market directions from. All right, and after looking at the direction from the higher time frame, the medium time frame helps to give you confluences or helps to give you a counter to your what's it called, to your higher time frame point of interest, which you have marked out from the higher time frame, or the higher time frame. Yeah, and then the entry time frame, just like the name entry, you just use that word, filter confluences for proper execution. All right, so you can see that this is GPUSD, right? And if you understand the market, if you understand trading market structures already, you can see basically what this is all about. You can see that we have what a break of structure here. Why? Because we have a high swept. Okay, so we had a high swept. The market didn't close above the high. We had a high swept here, and the originating low that created the sweep of the high, instead of going to create a break of structure, it created a sweep of liquidity, right? Sweep of an external liquidity. Since we had the sweep there, that low becomes what? Our current lower low. So whatever happens to that low is going to determine what the market will do next. You can see that what price did was what price came through and broke significantly below that low. Now, the moment price closed significantly below that low, right? What we are going to looking at is what? The pullbacks on this impulse that close below the low. I explained all of this in the multi-time frame analysis video as well. So do well to check that out. All right, and if you're yet to subscribe to our channel, please don't forget to hit the sub button. If you like our content, don't forget to say your comment in the comment section. Okay, so we had a break of structure to the downside, right? That is why we had this chalk here. We had this chalk because previously we were in an uptrend. You can see price creating higher highs and higher lows, but now we broke through the last significant higher low, right? Yeah, this is a low, higher low. We broke through the last significant higher low and got the change of character. The character changed from being bullish to become bearish, right? So all we are looking at is for us now to, because we know that the moment price have come significantly to close below, right? We're looking for the market to give us reasons to pull back to create what? A lower high, which is going to be lower than this previous high, and then we can keep riding lower lows and lower highs and lower lows and lower highs, right? Because we are now in a downtrend, right? Now, first of all, what did the market do? The market pulled back like so. It gave us, broke like so, gave us this pullback, came down, gave us another pullback, and then came down before having a push finally. Now, this is where the internal trading comes in, or internal structure trading comes in. Though this price structure is clear enough for all of this price movement to be visible on our directional bias time frame, which sometimes it happens, but sometimes it doesn't happen like that. You don't see you don't see the internal structures on the directional bias time frame because they are kind of like more compressed. And yeah, even if it happens, you can see that it is more compressed on this time frame as well, right? So the only thing you do here, the moment you see after having a break of structure, right, you need to identify. Now, to identify your internal structures, right, on the directional bias time frame, you need to identify the last significant pullback, all right, or let's say the first significant pullback if you are counting from here, all right. So the last pullback here, you need to keep identifying it. Let's say when the market broke down here, right, we had this one at the first significant pullback. When the market came down, we're looking at what the market will come to do to it. What the market does to it will help us to know if we are to hop on the medium time frame or the counter trade time frame to begin to look for counters, or we are just to stay on this time frame and wait for more price action. You can see price pull back, right, and then a pullback like so, and then break again. it broke below the pullback low again, and then price close here. All right, now our first or the last pullback from wherever you're counting. If you're counting from here, this is going to be the last pullback. If you're counting from here, it's going to be the first pullback. Okay, what the market does to the first pullback, I'll count it from here. What the market does to that pullback is going to tell you if you are to look for counter trend. All right, now before you look for counter trend and relate whatever the market does to that, you have to first identify your levels. Okay, after the break of structure or the change of character, you have to look at from the directional bias time frame, where is the market likely to go next to create what our lower low or lower high, depending on where the market broke to. For here, the market for this one, the market broke what downside, like so. We have this like that, and then we have the change of character to this level, right? So the market broke down here. So we need something, all of your trading confluences, you need them to help you know where the market is likely to turn next. All right, or what is the market likely to come mitigate. Just like we have this POI. For us, we had this POI right here, right? Because it's a valid order block. You can see it's a valid order block, and you can see also price is actually reacting on it right now. Okay, for those of you in the community, um, we had a trade from that place this morning. We ran pretty good profit, but I think we took the break even, right? You can see we had a trade from the point of interest this morning. We ran in good profit, and I also saw that some people in the free group also took the trade as well. So if you are yet to join our free community, look in the link in the description. All right. So this is after break of structure, as I was saying, after break of structure or the change of character, right? You need to look at what possible turning points for the market. All right, that's where we start looking at our point of interest, which is our OB and whatever point of interest you want to look at. That's not what I'm focusing on. That's why I don't want to talk more about it in this video. The focal point is that you have to make sure that your point of interest has a little bit of gap from the last pullback, all right, or the first pullback, for wherever you're counting from. This current pullback here, you have to make sure that there's a little bit of gap between your point of interest, and that pullback. Okay, let's say we had a point of interest right here. I won't go to my lower time frame to look for a counter until the whole of this, and then let's say I have one point of interest right here, right? Let's say after this pullback, I have a point of interest right here, and the market is likely to reverse here and continue the trend. I will not look for a counter trend yet because this is too close to where the market is. Whatever I'm going to do here seems like a gamble. Let's say we have this one, right, and then we also have this one. The moment price invalidate this guy, all right, I'll start looking for what buys, because I know since market did not respect this one, it's likely going to respect this one. So for a good counter or for a good internal structure trading, when you are on the higher time frame or your directional bias time frame, you have to identify where did the market break to, and then you have to identify what are the PDRAs or POIs that the market are likely going to reverse from next. All right, now after that, immediately you see the interaction of price with your first pullback, you can now hop on your counter trend time frame. All right, for me, I look at the 1 hour at the higher time frame, and I look at the 5 minute at the counter trend time frame or the medium time frame. All right, this is the time frame I use to trade price to my higher time frame point of interest. On the medium time frame, that's what you do. On the internal structure, you use it to trade price from your from where price currently is to your point of interest on the higher time frame. All right, so let's go to the 5 minute, and then we get to understand what price have done and how all of these trades were able to play out nicely. So you can see on this internal structure, right, or on this particular internal time frame, you can remember that the 1 hour is our what? This is our 1 hour structure right here. This is where we are looking at price to come to on the 1 hour. So if we met price here, I don't have the replay yet. If we met price, doing this thing around here like so, for us to be able to execute this trade or take this trade, we have to look at this like we have to look at the structure now on this time frame. If you look at the structure on this time frame now, you can see that we are having what? Low, and then high, lower high. We have a low, we have a lower high, and then a lower low, right? We have a lower low. Now the first pullback on that significant time frame is actually a change of character on our medium time frame. You can see that, right? It's a change of character on a medium time frame. Now you need a lot more of practicing and mindset shifting to be able to understand this, because I know a lot of people have contrary, let's say, we have learned contrary things to what I'm explaining to you guys right now, but you need a lot of mindset shifting to understand this. So the first pullback on the higher time frame is actually a change of character on the medium time frame. all right, or in the internal structure, it is a change of character. So immediately you had a change of character, it's still the same vibe you're looking at, the same kind of way. Change of character here, do what? Look for the pullbacks, and then look at how market will react to the pullback, and then filter yourself a point of interest to wait for the market to react, and then you can look for your 1 minute entry or your entry time frame to execute. All right. So we have a pullback, we have a change of character here on the 5 minute, right? On my 5 minute, this was a downtrend because the 1 hour was actually breaking down. So this is actually a trend on the 1 minute, on the 5 minute, sorry. And then prices broke through the last significant lower high. It becomes a change of character. The impulse that broke through the impulse that broke through the previous swing. You can see a significant pullback here, which we call what? This is a liquidity level here, right? So we have a liquidity level here, but we don't have any, let's say, order block candle around this level. We did have one order block candle here, okay? But price, after taking liquidity, price decided to give us, our 1 minute entry, and then this trade was a win.
It's 7 o'clock.
Thank you, Samantha. This trade was a win. It's also like so, because we know our point of interest is here. We need the market to come here. So you buying on the medium time frame to that level is how to do an internal structure trading. It's also the same for the sales. Okay, the first pullback. Let me illustrate that. So it is the same for the buys, because the scenario we had on GPUSD is for the sales, right? And then we are having a counter forward. We're having buy internal structures or buy trade in our internal structure, all right? So this is like, let's just illustrate for the sales, right? For you to have a counter sell instead of having a counter buy like we had on GPUSD throughout last week. So we have a break of structure here like so, you can see. And then you can see that the last or the first pullback in our, this is like the higher time frame structure, okay? Our directional bias, we can see we pull back, mitigated something here or took liquidity, and then price broke like so. So this is our higher time frame. But on our internal structure, we can have it like so, and then we have on our internal structure, the pullback is what? Valid. All right. So since the pullback is valid on our internal structure, and then we know too that we are having, let's say we had an OB right here, or we have one of the PDRs uh, laying here for us to be able to take price from. Okay, we know that price have to come to mitigate something there before we can get our entry, right? The moment you see price crossing through the first internal pullback, which is like here, when price crosses to here, it becomes a chalk on our internal structure time frame. All right, the internal structure time frame is the medium time frame. All right, but this whole structure is our directional bias time frame, and then we are looking for buys. But we know that on a directional bias time frame, we need to reach a point of interest before we can now get the buys to continue that trend. In order for us not to sit and fold our arms, all right, while price is actually busy playing now, because sometimes when you analyze, let's say on a 1 hour time frame, it's going to you're going to stay a lot, like you're going to stay for let's say like that trade, this particular setup is kind of like throughout the whole of last week. If we were to wait for just the directional bias thing, we definitely won't get a trade, all right? But price is actually moving, and it's a lot of pips in between our point of interest and where price currently was trading at. Okay, so the moment you see price closes, let's say for this one is for closes below, right? The moment price closes below the first significant internal structure pullback, right, it becomes what? A change of character. So we had to look for price to pull back here, create a lower this, and then continue selling price until could look for a sell here like so. You look for a sell there until price mitigate our point of interest, and then we can finally start looking for the buys. So this is how to look for counter sells. All right, the scenario with GBP here is to look for what? Counter buys. So you can see the moment we had this, right, price took this liquidity, gave us a 1 minute entry. You can see it came, interacted with the internal high again, gave us a break of structure, right? You can see we write MBOS here because this is a medium time frame break of structure. Price pullback, we had all of the liquidity lined up here, and then we have price sweeping this liquidity again, give us our 1 minute confirmation. Price broke, right? Because we kept buying, or we kept looking for that buy, we kept taking advantage of the buys, because price is still here to reach our point of interest on the 1 hour, of which we know if price doesn't reach there, joining the cells is not going to what? Be valid. All right, so we had another buy here, and then price push. This is where we started looking for the cells, because here price mitigated our point of interest, and this is the cell we had this morning. Price was around 1:5 or 6, I don't know, but it still came back to the point of interest. Price is yet to invalidate the point of interest, so whatever happens there, we are still looking at the cells. But until price invalidates it and also goes to close above the highest high, then we know that the whole trend have changed from a downtrend to an uptrend again. So if this was helpful to you, please don't forget to like the video. Don't forget to say your comment in the comment section. If you are here to subscribe to our channel, please once again don't forget to hit the sub button. Thanks for watching and stay highest.